Hello, Bulls and Bears. JJ here. It is Thursday, March 5th. Back with the second report today. Just an insane day today in the markets. We're going to recap stocks. All-time low on the treasury yield. We'll talk about what that means and why that's happening. Stocks got slammed. We're going to tell you why that's allowed to happen. And negative rates before the end of 2020. We're on a trajectory for negative rates before the end of 2020. Yes, we're going to talk about that. And chaos is a distraction. Remember what we talked about a couple reports ago. Never let a good crisis go to waste. And that's just what they're doing. They're using this, in my opinion, to mask or distract from the economic collapse. Now, for the most part, the economic collapse has not been felt yet on Main Street right now. It's in the banking system, and the banks are having emergency rate cuts. We have lobbyists out there from the too big to fail banks pushing for more deregulation, as if the current fractional reserve banking system wasn't already bad enough. They want to be able to loan out more money and have less money in deposits, even more than they already are. It's already a fraction. The deposit requirement is just a fraction of what they can loan out. And we're talking about leveraged 100 times over the amount of money they have in deposits. So it would only take a small fraction of the population to default on their loans. And the banks would again be in a position where they'd have to get even bigger bailouts than they're getting now through the repo markets and through the debt purchase programs that are also causing the Fed balance sheet to increase. So let's get into it. Let's take a look at what stocks did today. Absolute beatdown. All major indexes down over 3%. The Dow Jones down nearly 1,000. The S&P over 3% drop. NASDAQ over 3% drop. Gold held steady now, 1671. We're on an upward trajectory. We talked about that in our recent previous report, actually. Today I did pretty good in my gold miner stock. We're going to talk about that here in a little bit. Now, first of all, why the plunge? You may be asking, hey, JJ, I thought you said the Fed could just pump this market back up at will because they have unlimited currency creation powers. Yes, they do have the unlimited power. It's a fiat currency. There's no limit. They can pump in 100 trillion if they want to at the push of a button, but that would be too obvious. And again, they're using this, let's call it the cerveza illness. They're using this as the reason for the economic collapse. That way, the average Joe on the street will not realize that it is a flawed financial system that we're operating in right now. Right? The average person, and you see them at the president's rallies, they're cheering the stock market when it was going higher and higher. They were cheering for that. They're cheering the best economy of all time is what they believe. Right? Most people are not into the markets like you and I are, and most people on this channel. And most people can be easily fooled. This is the voting base. This is what has to happen. And this is how politics works, unfortunately. It's a big con game. It's a lie. It's a fraud, whatever you want to call it. It is what it is. That's reality. So they're going to keep on using this as the excuse for the panic. And guess what? Now they can cut rates. And now they can implement bigger QE, bigger overnight repos. We talked about the repo oversubscribes that we talked about in a previous report. It's getting worse. It's not getting better. They have the excuse now for all these bailout operations, lower rates, and negative rates, which we're going to talk about. And people will just say, yeah, everything was fine if it wasn't for the cerveza illness that started spreading panic across the globe. So if they just pumped the stock market up right now and went on to all-time highs again in just a matter of days, then that would not fit in with the narrative that it's the panic right now spreading across the globe that's causing all this, right? So expect this to go on for, I wouldn't be surprised if it went on for several weeks or until the panic subsides, if and when that happens. All right, so this is what they want. Chaos, in this case also panic, as a distraction for the economic collapse. Yes, the economic collapse is happening. Right now, it's just in the financial markets. They're doing everything they can to mask this from the overall larger population. Okay, let's jump over to Market Watch. Fed expected to continue cutting rates beginning as soon as later this month. If this happens, and keep in mind we just had an emergency rate cut, a 0.5% drop there, 50 basis points just recently. If this happens, this is going to put us on a trajectory for negative rates by the end of the year. We'll have to see how big the rate cut is going to be, if it's going to be a rate cut. Of course, that's still a question. But many people are pointing to now is the perfect time to cut rates because people are not going to blame the policymakers. They're just going to blame, again, the panic that's happening on these emergency rate cuts and the increase in the rapidness of the rate cuts. Now, one thing to keep in mind about all this when we talk about the illusionary economy, when they point to the stock market and the unemployment numbers, which are highly flawed and manipulated, right? The real economy is in the middle class's pocketbook. When most people are living paycheck to paycheck right now, 70% of the population, 80% when you look at millennials. Eventually, it's going to catch up. The wages are not keeping up with the real inflation, with the rising prices, the rising rents, the rising home prices. And now add on top of that food shortages that we're going to see. It's going to become apparent here in the next few months, in my opinion. We're already seeing the panic with the empty store shelves. That has to do with the cerveza illness. Hopefully that'll start subsiding here in the next few months. But we have major problems with the supply chain, which is going to cause demand for certain items here to explode. And when demand explodes, prices explode, and people, the population, again, living paycheck to paycheck, most people are not ready for this inflationary environment that we're going to see. So that's what they're up against. They can manipulate the stock market, but the real economy, people's pocketbooks, people's stagnant wages, not keeping up with these rising prices and the surge in demand that we're going to be seeing, the fake economy is going to be crashing into the real economy, and a lot of people are going to get a harsh wake-up call. And if consumers do get that harsh wake-up call and pull back on spending, that's when you're really going to see things collapse. All right, so it's the perfect time for the bankers behind this, for the Fed, for the politicians in charge to do these emergency measures and not get the finger pointed at themselves and their policies. Right? We also talked about in the previous report, banks are using this also for more deregulation. It's pretty insane. It's crazy times to be alive, but this is what's happening. And again, most people will not realize what's even happening. As long as they can keep the banks lending, even though the liquidity crisis is happening, banks loaning out more than they have in reserves, even though defaults are increasing on credit cards, on auto loans, and in the near future it's going to bleed over into the housing market. We're going to see foreclosures. Even though all that's happening, they're going to try their best to keep all this masked from most people. It's going to be hidden behind a wall of debt and bailouts. Let's talk about the treasury yield on the 10-year, all-time low. All-time low. Right, what we should ask ourselves, what kind of sane person, individual, is going to invest their money for 10 years and get less than a 1% return annually on that? That's an insane investment if you ask me. Right, I would rather gamble in the stock market than get that kind of guaranteed return. Right, this is all fiat banker manipulation. No sane investor would want to make this investment. Sure, there are investors out there that do invest in such tools, right? But this is just complete manipulation that creates an unnatural return. Cash should not be that valueless, right? But that's the way it is. They're going to continue to devalue the currency, and just wait until negative rates get here. Negative rates, you're going to put your money into a checking account, and instead of getting even a small return, you're going to pay the bank for them to handle your money. So then it just makes sense to take out as many loans as you can. Now, just because the Fed funds rate may go negative, the bank may not give you negative rates on your loan. It's possible if it gets low enough. They have to continuously feed the debt machine. Otherwise, this illusion gets wiped away, and everybody's going to wake up to the harsh reality that we are in a financial turmoil right now. And it's not just the United States. This is a worldwide, global financial system. And we talked about that a couple reports ago. We see Canada had an emergency rate cut also. And guess what? They blamed the cerveza scare. And remember, their solution is always the same. It's more debt. It's lower rates. Try to inflate the bubble bigger to distract or mask the underlying problems. But you see, debt is the problem, and when you have a currency that can be created out of thin air, right, so what can we do? Well, I think a lot of this that's happening right now, and especially the talk of negative rates coming up here in the near future, is going to push a lot of people into hard assets, and I think that it's a good investment to dip your toe into if you haven't done any of it. I personally do try to stack some hard assets, mostly silver. Every month I go out and get a few silver bars, but also gold miners. I think gold miners are highly undervalued, and I just want to show you my Robinhood account. I'm still with Robinhood. I decided to leave a small amount of money in there, even though we had those outages a few days ago. And just today alone, look at this, a 12% return, because I'm doing a put option against an ETF that shorts gold. That means when gold goes up, it's a leverage ETF that's also going to go up. So essentially it's shorting the short, and it makes it go up when gold goes up. So today alone, 12% return. That's pretty good. All right, so let me know what you're doing. Are you in an ETF? Are you in the physical gold? Or are you still in the stock market? Are you waiting for the bounce back up, the manipulation to go back up once this panic wears off? Once they get the rate cuts that they wanted, maybe they're going to pump it back up. That way they can keep the people fooled to the end of the first term, if you know what I mean. I think most of you do. Thanks for watching this update. Until next time, ride the bull, prepare for the bear. Bye for now.